My name is Thomas, and this is For the Comment. Today is April 11th, and we're going to do another portfolio reveal video. But first, I got to outline the rules of the road, which are you have to do your own homework and make your own investment decisions. I get things wrong all the time, so keep that in mind and do not make an investment decision just because I make it. All right, cool. Let's jump in. Performance for my portfolio over the last week has not been particularly good to me, but it's actually not been that bad in my opinion, given the pretty substantial volatility that we saw over the last week. And if you remember back to my last portfolio reveal video on March 31st, the net liquidity value of this account was around $968,000. Today it's at $785,000, so still down for sure, but again, in my opinion, not as bad as what we've kind of been feeling in the market this last week. And a lot of this market volatility, you can see this kind of retracement here as the market headed lower. That was due to some hawkish commentary that we got out of the Federal Reserve and Federal Reserve governors, particularly Tuesday and Wednesday last week. So some comments to the media and as well the Fed meeting minutes, that pushed the market lower as people are still worried about the Fed being overly aggressive in their monetary policy adjustment, and that could pressure growth and cause a recession. So my portfolio definitely felt the pain of that last week, but overall, I still have a smile on my face because excess liquidity for my portfolio is around $270,000, and this gets into some of the margin topics that we've talked about in other videos. But that 270 means I have a decent ways before getting a margin call. My maintenance margin level is around 515,000 right now. If the market was to fall, my account was to fall, this would get even lower. So I assume this would probably be around 450,000 is where I would get a margin call. And so even with all that volatility we've had in this last week, I still feel very comfortable that this portfolio has a decent amount of space in it. And we are pretty decently off those March lows that we saw in the middle of March. About a month ago, those were pretty painful, but it's very possible that we could go back there. So I'm not really holding my breath that it won't, but if we do end up going back there, I'll have to reevaluate. But it seems like that raw fear that was there in the middle of March last month has dissipated a little bit. So we could grind lower again because of those recession worries, because of Fed worries and rate hike worries, but we'll just have to see how it plays out. And if that Fed commentary that I just gave was confusing to you, I'd highly recommend that you check out my Fed Explained video. I'll post it over my shoulder here. And it talks about the role of the Federal Reserve, why its job is so difficult, but as well, I highlight a lot of economic data that's currently worrying investors, and I talk about my outlook. But most importantly from that video were the takeaways and how to keep all that macro data in perspective as an individual stock investor. And that came down to some really deep beliefs that I have as an investor. And they're that, one, you cannot time the market with respect to your investments. And then two, it's that you should never bet against America. And thank you, Warren Buffett, for that one. And then number three, it's that, again, from kind of Thomas takeaway, so a bit cheeky here, but it's that in good times, I seek to own quality companies. And in bad times, tough markets, I seek to own quality companies. That's my strategy. It's to go out and find the best quality companies that are going to do amazing and that can win regardless of the economic environment. And then you own them for 5 or 10 years, and that is how I believe investors win. So that's what I try and do. Go out, find those companies that have bright futures, can stay in front of competition, and that have capable management teams. And that's really what FTC is all about. So if I go back to my portfolio here, you'll see that as I scroll through the top 10, not much has changed. I haven't traded at all over the last week, just kind of watching the volatility. There's been some shufflings with respect to what companies where in the ranking, but my conviction isn't waned at all in any of these companies. And then as I go through it, it's definitely been clear that all the hawkish commentary from the Fed has been pressuring my technology exposed portfolio. But even at the same time, I feel that these companies are in the corner of some of the most innovative areas of the US economy today. So my plan is to hold these things for the long term and just hopefully participate in these companies capturing those really amazing tailwinds in innovation. And that's all assuming that I don't get margin called. So fingers crossed for that. And then if I jump to CNBC, it was a pretty bad market day. So NASDAQ was down 2%. You had the S&P down 1.7. Surprisingly, in my account, I wasn't down that much, 22,000, which is a pretty mild day in my opinion. There's some mixed, stocks that did halfway decently. And interestingly, the VIX was up quite a bit, but it's still a lot lower than where it was in the middle of March. So again, it feels like the fear gauge is just a little bit less than what it was. And then when you look at the treasury market, you're still seeing a sell-off in bonds. And this is really significant because it still just shows that rates are going up. And you're seeing that really across the yield curve, except for the 2-year, which I think is interesting because now I talked about recently the 2 and the 10-year treasury spread. That's what a lot of investors will look at as an indicator for a recession. And so the 10-year is now 2.77, the 2-year is 2.5. So that shows there is not an inversion right now, and that maybe that recession worry is a little less. So that's a positive thing. Then you've got Elon Musk at Twitter. That's interesting. I love Elon Musk. I don't really love Twitter, so I'll keep my eye on it for Elon. And then you've got Shopify, which I own, is doing a 10-for-1 stock split. That's good, keeps price down, and makes the stock more accessible. And then interestingly, you have a private equity company. Her name's Thoma Bravo. Is somebody named Thomas? I find this name a bit confusing, but I assume it's Thoma Bravo. They're acquiring SailPoint, which is a cybersecurity software as a service business, and that's actually really encouraging because Thoma Bravo has bought some other software as a service businesses recently, including Anaplan, and they paid pretty healthy premiums for these companies. And you can see SailPoint was up about 30% today. And for me, it's a pretty clear indication that we might be seeing a valuation in price floor in some of these software as a service technology companies, which have been some of the most beat up over the last 3 or 4 months. And I would know because I have a lot of them in my portfolio, and some of these ones that are down the most, as I scroll way down, are actually up pretty decently today. So that could be the reason why my portfolio was doing okay in a pretty tough NASDAQ market. And then finally, earnings right around the corner. This week, we've actually got some really big reports from United Health, JP Morgan, you've got Wells Fargo, Morgan Stanley, BlackRock, a lot of the banks. And then if we jump to next week, this for some reason takes a second to load. Market Insider, go figure. Pretty good calendar here, but you've got Tesla, Johnson & Johnson, Procter & Gamble, again, Bank of America, Verizon, Danaher, some really big companies that will give you a good read of the economic picture. So that is where the rubber meets the road for companies, and I'm super excited to keep an eye on that over the next couple weeks. So in the spirit of tax season, I want to highlight another way that margin has been really challenging for my portfolio. And this is through the activity statement for my account since January 3rd, 2022 to April 8th, 2022. So it's year to date so far this year. And this is the view from my realized and unrealized performance summary. So realized profit loss in total. So if we scroll down here, you're going to see a lot on the profit side, and that's because I got margin called. I've documented in other videos that I sold a bunch of stock that I had gains in, fortunately, because I was getting a margin call and I had to sell stock. So I wanted to sell the ones that I had a gain in. And there are a few that had losses here, but overall, there are a lot more gains than losses. And if you go to the bottom here, you'll see that the total long-term realized gain that I had in my account over the last 3 months was $414,000. So, woo, I made $414,000 over the last 3 months. But remember, this is going to result in a really nasty tax bill. So, as it's filing season, if you look at $414,000 in gains so far this year, and then assume that I have a couple more decent trades and that we make a little bit more money as a household, then ultimately I will be in the highest tax bracket for capital gains, which is 20%. And most people will pay 15, but it looks like I'll probably be in the 20% range. So hooray, and 20% of 414,000 is around $80,000. So I'm going to have to pay an $80,000 tax bill to the government. And they require you to pay in estimates, and you have to do it quarterly. So even though this is for 2022, I now, over the next 4 quarters, I'm going to have to pay at least a $20,000 tax bill, write a check. It's going to be more than that, but I'm going to have to write a check to the government for at least $20,000 4 times over the next year. So super fun, good times. And obviously these are very much first world problems. I'm very thankful to have the gains because they saved my butt during my margin call, and I totally put myself in this situation. So it's my own doing. I'm a dummy. But all that being said, I'm also very happy to pay my taxes when I have to, because that means that I made money. So overall, paying taxes isn't a problem. It's a little bit of a very, very ironic twist that I made $414,000 so far over the last 3 months. But if I jump to my portfolio view, I can't touch any of that money. That was all on paper because that $414,000 went all to pay down my margin loan. So even though I made that much money, I can't touch any of it unless I want to sell more stock, and that is definitely not my plan. And if I sold more stock, especially the ones I had gains in, it would actually increase my tax liability even more. So again, margin, super complicated, can really bite you. And now we have to come up with $80,000 in cash over the next year. And fortunately, we're very lucky we have a way to do that with the home equity line of credit we have on our house. So we will be okay. But an interesting twist of fate. I guess the one silver lining here is that the net liquidity value is pretty close to what now my cost basis for the account is. And what that means is that this is showing that I've actually lost money in this account now. So I've lost $88,000, which means my cost basis for all of the stocks is around $870,000. So I could actually blow out of this entire portfolio tomorrow and I would owe no taxes, which is great. But at the same time, it's not what I'm going to do. And that's a very sad silver lining, especially considering this portfolio was worth $1.2 million in November. But I'm just going to forget about that and feel better that that also would have resulted in a really big tax bill. So net, happy tax filing, everybody. And that's the portfolio reveal video for April 11th, 2022. I hope you got some value out of it. And if you did, I'd appreciate a like or subscribe. It helps grow the community, which is awesome. And if you have questions, be sure to include them in the comments section below. See you in the next one.